Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So I just ran back from the New York Stock Exchange, did a quick Fox Business hit, just in case you haven't been watching. I've been doing it every Monday, typically at 3 o'clock. This time it was at 3:55, and if you blinked, you would have missed me. But I would have had a lot to say to everyone else in that TV land, but you know what? If they don't watch this, then they miss out. Anyway, if you're watching the recap, you know that last week we broke a key upper momentum level. We talked about S&P 2100. We talked about the ascending channel and also what happens when we break the 8 and 21-day moving average, which is you try and get out of your longs and maybe try and figure out if you could handle being short. So you go real quickly to the trend that's been pretty much intact for a decent amount of time, where you had this like ascending channel that we've played with many times. Lots of times we've touched it, looked like we were going to break and didn't. And then coming into this little wedge type pattern, I know on Wednesday, it looked as if we might go to the upside, and then all of a sudden, that happened on Thursday. So on this day was your first day to say, you know what, not even your first day, just, we've done it so many times. I think some people took off risk here, you put it back on there, you took it off there. So this truly wasn't your spot to say, okay, I'm getting flat. It's probably early to do that, especially since we did jobs report on Friday. But then on Friday, basically, the S&P was like really weak. We did not get back above 2100, closed below with a close at 2092. And then today, what you knew was Friday's low, which was 2085. So broke this ascending channel. So anyone who's been trying to be long versus this line or versus this trend, and this is just an upper trend, basically active time frame that people who trade for alpha and P&L trade against, that was your basic out, maybe try and think short. And then today happened, okay? Not a huge down day, actually was, kind of grindy and felt very controlled with absolutely no fear whatsoever. And now it closed at 2081 below the 150-day, which held here and got played around with there. And the last time we were at the 150-day was back in the beginning of the year. So with that being said, some people are probably still short and thinking we at least test this 2071. Then who knows? We might get our first test of the 200-day. Okay, this spot is only 3% off the highs. So hear me out. 3% off the highs, and people on the floor were having fun saying that traders are having emotional capitulation right now. Not because we're down so much, just because of the lack of speed and lack of momentum, either long or short. Like tomorrow, if we gap up 7-8 handles and everyone's still short, that emotional capitulation will happen again. But as far as stock market capitulation, not at all. 3% off the highs, off of a 6-year bull run. That's why the action's been so horrendous, because nobody really wants to get caught holding the bag just in case we do get a 5 to 7% or even a 7 to 12%. The DAX just came off 10% off highs. I know that we didn't have as big of a run as them, but I'm just saying it could happen. So you have longs, little flaky, like me. I've been a little flaky lately because I don't want to get caught, but sometimes I feel like I have to be in stuff that acts well. And you have shorts who've been absolutely annihilated for the past 2 years, if they've tried to, short from 1300 to where we are now. So anyway, you break an upper trend, you make some changes, you look at the chart again, and that was right around here. So now we'll see what happens tomorrow. If we gap down, maybe this could hold for a trade, and if we reclaim our prior low, which is 2079, maybe we get some kind of bottom tail into this area. Or if we open up, maybe it gets faded. At this point, I would be risk down, or at least low gross, low net, which a smart guy that has been trading for over 30 years has been telling me he's doing lately, because it's been tough. You did have some strong spots that still look strong. The bios still in this range. I came in long the IBB, and I'm not long it anymore. I'm just going to wait. Still above the 8-day. We'll see what happens. It's still very strong. The IWM, a little down day today. Again, it's hard to get 2 days in a row. We mentioned this morning how buying support is always best, and unfortunately when it looks decent you have to sell it or nothing happens, and this still looks okay. So IBBs and the IWM look at least in line, but if we start selling more in the S&P and the Dow, these two could come in. So we'll see. You have the diamonds right now that are now flat on year. Okay, so what does that mean, flat on year? Okay, it means very easily not up for the year. Anyway, this is when the 8 and 21-day broke. You have some pretty big support right here, and then the 200-day is right at 17,500. So really what flat on the year means, it means that there are funds out there that haven't performed, that feel like they don't have to be involved now because You know what? They're flat on the year. If it was up 3-4%, they'd say, oh, I got to keep up. I got to have money involved. I got to, you know, the volume would increase. But because it's flat on the year, you know, lack of involvement. And then if it starts to, you know, be down 1%, 2%, you know, then all of a sudden some fear comes in as, oh my goodness, could this be, again, the start of a bigger one? So anyway, the diamonds aren't really a drag, but they're underperforming versus the S&P. And they're also underperforming versus the NASDAQ. And the NASDAQ, you know, broke its upper flag, its 8 and 21-day moving average. So if you were watching this trend and you were, you know, trying to be involved in the NASDAQ that was near all-time highs, you know, perhaps you loosened up a little bit. Broke the 8 and 21 days. So when it broke this 109.50, if you're an active trader, very active, maybe you got out if you had a swing long position, and then maybe even got short, because who knows, maybe this does start a move lower to the, you know, 106 area or even closer to down here. At this point, you don't know. All we know is tomorrow we'll see how we open up, and we'll take a look at this pivot. So tomorrow in my morning note, when you're looking at it and reading it, it'll say, okay, futures are down 7 handles. See if we could reclaim 107.97. We can't reclaim 107.91. 100-day moving average is at 106.93. That's how people interpret my information, just because I give levels and we see what happens at those. The major drag has been the transports. There was a small bounce last week. You know, those bounces have to be measured closely. You have to love them and leave them type of scenario when they're oversold, and that's what that was. And you know, today was a pretty ugly day. You know, still below the 200-day. So when things are below the 200-day, you take small bounces until it gets reclaimed. You had a small move up, and then now today it just engulfed this, you know, this basic range right here. So tomorrow, I guess, see if it does some kind of red dog reversal around this. But then here is support, and again, this trend has been lower. This trend has been to the downside. Broke the 8 and 21-day there, tested it there, broke the 200-day, and it's still below. You know, and then you have the airlines. The airlines were a decent trade for some people who bottom fish. But when you bottom fish for trades. You don't stay involved, or at least you stay with a starter and you trade around it, because broken trends are broken trends. And this UAL, what did it do? Here is where, you know, it broke its upper support right there. And did it reclaim it? No. Here's when it broke the 200-day. And then it did give you a trade if you tried to be long right here when it broke above this area. But then this is when it broke back below, and then a little weaker, and I guess, you know, here's right back to the bottom of the range, below the 200-day, so still not looking so healthy. American Airlines, same thing, new lows. You had a day-and-a-half trade. Okay, when you play oversold names that are below the 200-day and you didn't get stuck because you got out here or whatever, you take your trades. And if you were just, say, thinking maybe it can continue right here, because who knows, maybe you get a little bit of a flag for continuation. Once this breaks, you get out of the way, and it broke right there. Get out of the way. This oversold bounce is now over. You could have saved yourself that, you know, what's it called, that pain, so to speak. And then in high beta land, which is where I tend to live, at least, you know, if you took home Netflix overnight, it started up $1.50. And usually when I take home overnights, if you get follow through in the morning, I always sell half before I do the morning call, and then I see if it stays positive. If a stock goes from green to red, I'm usually out of it. I wait for a 15 to 30 minute pivot low, try and get back in versus that, and then if it breaks that, the trade's done. The action changed, and we've seen the action change so many different times from day to day. Netflix, you know, what did it do? It opened up and went red pretty quick. So once it opened up and went back below 633.78, you could have been out of it. It did open at what price? You know, 635. Didn't really give you much follow through, and it's still on the 8-day. But if the market gets more selling, you got to be careful. You know, Amazon, what a horrendous trading stock lately. Horrendous. I know that last week when I had a lot of longs on, that was when it looked like we had some healthier action. I was long this, and thank goodness I sold it when it broke below that prior day's low. That prior day's low was 432.78. If I would have stuck with it and just kept buying it, you know, it doesn't look like a lot, but $10 on Amazon for a trader, that's probably a big loss. So anyway, it's right back to the bottom end of this support, and traded off it a little bit. I guess we'll see if it goes sideways and bounces. If it doesn't, you know, who knows? Maybe it's vulnerable to trade below 421 and test the earnings gap here of 414, and then as the moving averages catch up. On a macro sense, you know, people have been in it for a while probably laughing. They're saying, what do you mean it's horrendous? We've had this thing since, you know, 200 or 100 or in here. But on a trading basis, looking for some follow through and looking for some P&L, it hasn't been easy. You know, every time it looks great, boom. You know, I think some guys actually made money short Google today. You know, Google, I've been trying to give this stock the benefit of the doubt. You know, it hasn't performed well at all. This was your triple top at 580. Then it looked as if it was going to probably or try and take out this 560. On right here, I was long, stayed with it, and then when it broke below that low, I said, I'm getting out of the way. I don't trust Google. I want to buy high and sell high. I don't want to sit in it. And then, that was, I think, Friday was a little weaker, and then today. So now it's on the bottom end of this wedge consolidation, closing near the lows, below all the moving averages again. So not something that you should be sitting in if you're an active trader. If anything, maybe some people went home short, but the volume's not great anyway. So, usually, high volume breaks are what you take home short. When it's just in these ranges, you can knick-knack it, but overall, better off just avoiding it. But at this point, more negative than positive. Apple had the big event today, and you know what? I'm going to pay $10 for that music stream, and I'm also getting my watch in a week. Doesn't mean the action's great in Apple. Last week I tried being in it a few times and basically said it's lagging the market. I like when Apple is actually leading the market. It's more powerful. There's better trades, and unfortunately, I think I shorted a little bit on Friday, made money, and I didn't stick with it because I just don't like being short Apple. And anyway, you look at the chart now, and at this point, it's down multiple days. It broke this level. Remember we said if it breaks below 129.10 to 129.40, means the momentum could be leaving, and now it's below the 8 and 21 day. Today it did bounce off support. Remember when we broke out right here, that we actually had a nice long there. It kind of held around there. It's trying to hold the 50-day. We'll see what happens tomorrow. Here is a bigger support. Here's another moving average. That's the 100-day, 125.19. And ever since it failed to break above the earnings high, it's been really just a day-and-a-half trade. If you've owned it for years, you don't care. If you owned it for years, look at this move it's had. It's made you a heck of a lot of money. And it was a great trade last year too. And the first split right here, when I said gun to head or iPhone to head, I think it goes to 100 plus. Look at the size of the move. And if you actually look at it this way too, it doesn't look so bad. It just looks like it's consolidating. Here's your upper end of the range. Here's your lower end of the range. And it's smack in the middle. So when it's smack in the middle, it could go to the lower end. So if you're playing for momentum, it's not there. If you're playing to buy a dip, this dip could turn into a dip to here. And then if for some reason the market does, get a little weaker, you still have, it could go even lower than that. So you got to figure out what time frame you're trading. I think that's the key here. The key is that you need to know where you want to live. On a macro basis, the S&P is only 3% off highs. But on an active basis, we broke 2100, so it's hard to sit in longs. There's no real momentum. Things aren't, getting up and going. It's hard to own things that, you might have against you for 3 or 4 days. As far as cybersecurity, they've been great. FEYE, one of my top picks of the year. What did it do today? They sold the strength a little bit. Okay, doesn't mean that you could just blindly be shorted, but again, it's extended from the 8-day, which is right there. The last real momentum play was right around here, 46. And then also here, when it broke above this little wedge pattern before taking out highs of the year. The first pattern that we made pretty good money on too is right around there. So move number one, another entry, another entry. That's why today I was like, I don't really love the entry here because it's extended, but it still looks good. Cyber was a better trade today as far as opportunity. It did trade off highs, doesn't mean it's game over, but means that if you bought when it traded above this high here, and you waited a little bit too long, you might be like, what do I do now if you still have it? It's a little bit extended. This was your position on Friday, position into it. You got some follow through, so if you sold half, congratulations, you're holding half and you're probably fine. Now see if it holds this gap going forward. If you just bought it today, chances are, unless you were really quick, you probably didn't make much money. The only thing you could have really bought quick and made money a few times in was Tesla. Tesla, I talked about it on Benzinga this morning. You had your small day one, said if it clears this 253, you can get a nice move. It did hit 258.75 before selling down a little bit with the market. It's been acting well. When did it start acting well? When the trend changed. When did the trend change? When it broke this descending channel here. We talk about descending channels. When they change, you want to change with them. Let me get my little pencil. And that was here. Remember that? Descending channel there, broke to the upside, went sideways, and then started a new trend above the 8 and 21 day. That was right here. Here was your sideways action. This is when I posted the chart on Twitter. You could probably find it. And then since it's been above the 8 and 21 day. So something to put on your focus list. Today it broke out, and now we'll see what happens tomorrow. The banks were just a little wishy-washy, which we said they were overbought anyway, so that couldn't help as far as the overall market, and now we'll see what happens there. What did the TLTs do today? Not much of a bounce. So still, people are still really believing in September. This is when the accelerated trend broke. Here is when your intermediate trend broke. Here's when your 200-day broke, came up, retested, failed, and now it's hovering on the lows. I don't know if you could press the short here, but it doesn't necessarily mean it's a long. We'll see. The EW, let's see the HEDJ. Here was your head and shoulders top formation, which was just a signal to reduce, or that sentiment could be changing in the DAX and in Europe. And here's your left shoulder, your head, your right shoulder. The first trade was pretty calculated, giving you a measured move down to here. And then you had your ascending channel. Remember, we talked about that also. It looked like it came back up, broke right there. That was your way out. And now, at the 200-day, I think it's interesting for a trade. We'll see if it holds it or not. If you sold it here, or you got out of it during this process when it broke the 8 and 21-day. Look at a nice trend, guys. Make it simple. Above the 8 and 21-day, this was a great long. Here could have been your first test, and it held, didn't close below it. And then as this pattern developed, which we've seen this pattern develop in our markets, probably the past 2 years when we had strong first quarter moves into the second quarter, we didn't have that this year. Then you had your corrective phase, and now 10% off highs or so. Maybe it goes around 11, 12, and that's why a lot of people are kind of scared to buy the dip here now, because 3% off the highs. It could be 5, it could be 7, it could be 10. And this slow grind lower could turn into a fast one. So you're better off being a little bit out of harm's way in cash and wait to see what happens, to see if it gets faster. I personally think that, water pistol or whatever, why wouldn't we at least see here? And I do think there's probably at least a 60% chance we see something down to here. And with 3 days down tomorrow, hopefully there'll be a trade, some kind of maybe red dog reversal around this 2079 with the 150-day right there. So we'll see. At this point, all you know is that this ascending channel broke, and we'll see what kind of follow through we have to the downside. We're oversold. It's not severe. And you just have to have your system in place to honor your stops. If you test longs and you put on feelers, you have to figure out whether or not you want to sit in them. I know somebody's saying, like last week, oh, I'm buying a little Intel. It's down 2 days in a row. I'm like, why? Because it's Intel. No, you don't do that, because 2 days down, 1, 2 into this, didn't hold the 21-day. Then you have 3, 4, 5, 6 down days from here. That's a lot of money, especially since people try and take size in Intel usually. So don't think of because it's Intel, you could buy it. And don't just think because it's down 3 days or 4 days or 5 days you could buy it. You wait for a signal. You wait for a level versus a level. So tomorrow we'll see if it opens down. Do you get a cash flow trade around this 31.21? But overall, it's below the 200-day. It's below all the moving averages. It's a bit broken. So maybe there's a trade there tomorrow. But the moral of this story is don't just buy a stock because of the name. Buy it because there's a strategy attached to it with a chart. And that's it. So I'm pretty much risk off tonight. I wish someone would have stole me on Friday and said, I'm taking you away on vacation with your family, because I was very short Thursday into Friday, and then I just didn't hold through. And you had a lot of opportunity today to actually get short. And, I was thinking a little bit like we hold in there, maybe the Russell and the BIOS show some strength. I was looking to see, if we could hold, and we didn't. So instead of making money on the short side from the break of the 2100, I'm now just out of the way, and I'm going to figure out if I could find some inflection point to buy and see if we can get a day-and-a-half trade and see if there's something more than that. And I'll stay that way until there's more clarity. Have a great night. I'll see you tomorrow.